Welcome to Master Trader, where you learn simple market analysis to make money investing and trading in the markets. I'm Dan Gibby, Chief Options Strategist, and in this chart of the week we're going to discuss through a number of examples the concept of multiple time frame alignment. Whatever time frame you're trading, meaning if it's a swing trade based upon the daily chart, which is right here on the left, I have the S&P 500 ETF spiders here, and then I'm going to use the weekly here in the middle and the monthly on the right. So this would be a multiple time frame analysis discussion on swing and position trading. But if you were day trading, let's say off a 15, 30, or 60-minute chart, the same analysis that you're going to learn today applies to day trading. You're just going up a time frame, down a time frame for the time frame that you're trading. But when we have multiple time frames in alignment, that signifies more agreement of the bulls or the bears, and we're looking for what we call a price void, meaning there's insignificant either support if you're going short or resistance if you're going long, which should allow the underlying issue to move more freely as opposed to chopping around. So let's start with the spiders here, because this is an example of they are not in agreement. The daily here, it's still in an uptrend. It's above the 20, 50, 200. We have higher pivot highs, higher pivot lows, but we had a nice bullish reversal on Thursday, this green bar. Friday was a gap and crap, ugly selling at the market open, closed with a dead low, engulfing bar. And that suggests that if we can't bounce on Monday and we just chop around and take out a 30-minute low, that we're going to go lower. That's what the chart suggests. The weekly chart also is in an uptrend, but we have a bearish reversal bar after a huge move off the June lows. The monthly, however, is still very bullish. This is, let me make it a little bigger. So this was a huge bullish reverse head and shoulders pattern this last month, so that would be June. Almost engulfed the prior month, very deep retracement, and then this month, even though there's only 21 days in it so far, this monthly bar is not complete. That is a bullish bar in the upper part of this huge green bar from last month. So spiders expect choppy action, and we're actually predicting lower prices here on the daily chart, which once we get a bullish reversal, hopefully timed with our market internal signals of being oversold short term in breadth and sentiment, we'll be looking to go long under the assumption that the weekly and monthly trends are going to continue their bullishness. Let's now look at a bunch of other trades just for examples. STI is one that we are going to be giving our subscribers in the Swing and Options letter. This daily chart, wide range igniting bar out of multi-month consolidation. We had a flat 20 and 50, so it's been in a trading range, but we made a higher high, we have higher lows. The weekly chart is breaking out of this symmetrical triangle pattern, so that's contracting volatility into the apex, breaking out, and look to the left, folks. This is what we call a price void because of this rapid drop here. This is a bullish greater than 100% retracement, and it's now burning off this prior run. The monthly chart, it's slopping around here consolidating, but look to the left. We have a price void. So that's on our bullish list. Roku, we actually gave this to our subscribers on this breakout day. Kind of a bullish reverse head and shoulders. The weekly and monthly were breaking out to all-time highs. Now, if this can take out Friday's high, then or give us a nice bottoming tail with this wide range bar holding intact, meaning it's not negated, then if it can get over this red bar, this is still a bullish watch for us. Mitch, we gave this to our subscribers, another multi-month bullish consolidation on the daily above the rising 20 and 50. We bought it on Thursday on this breakout day, and it's a bullish weekly and monthly. FDC, we're in also for our subscribers, wide range breakout on the daily, and it's a breakout on the weekly and monthly with no resistance to the left because it's all-time highs. Ben, we're going to keep this on our watch list. Now this one, it broke out Friday, but it's at major resistance on the weekly. So this one's not in agreement. However, the monthly is a beautiful two-bar reversal here, also a bullish inverse head and shoulders pattern. Because of this drop in the year 2018, we have a huge price void above. So what we would like to see is this just to chop around and go sideways on the daily chart to burn off some more steam at this weekly resistance. As long as this green bar from Thursday holds and gives us a bullish daily setup, that's on our long watch list for our subscribers. BMY is a short of ours. We had a bearish gap down here. We call that a professional gap, igniting a new move. All these people are in shock right now. And then it's slopping around, gave us another entry on this wide range bar, bearish consolidation. You look on the weekly and monthly charts, all three of these are in alignment for bearish continuation lower until they get either extended or find major support on a larger time frame. Couple more here. Whiskey. This was a beautiful bullish retest on the daily chart, a climactic buy setup on the monthly chart with a reversal bar, and we had a gap up on this day. I don't know what the news was. I don't even care what it was, but we gave that to our subscribers as a core trade on that gap up right at the market, right when the market opened. We said buy it right here with a big stop under here. It had a little gap and crap day on Friday, so for new entries it needs to chop around for a week or so on the daily chart, and then we can look to either re-enter or add. Oxy, a trade we gave to our subscribers on Friday, and I don't know if it acted bullish here in light of Iran seizing a UK ship in the Persian Gulf or whatever the news was, but it's a multi-month bottoming pattern. The 20 MA is starting to curl up. We had a wide range bar from a nice buy setup. We have a bullish retest on the weekly, and notice again the price void. This one is not a core trade because it's in a nasty downtrend on the weekly and the monthly, but with the price void, it's going to be a beautiful swing trade for us. Target, this one is it's at monthly resistance, so it's not a core trade, but look at this beautiful multi-week trading range on the daily and the weekly chart. It's burning off steam. So that is on our watch list for a nice swing trade on either some type of breakdown failure or breakout. One more to finish that's on my watch list. Old Miller Herman. Again, we call this a professional gap breakout from this trading range. We call this professional igniting volume. We have a bottoming tail range expansion bar. It's extended here far from the 20. But it's been consolidating again, burning off steam. This is another inverse head and shoulders where we got this little downside shakeout, bullish two-bar reversal. Three weeks of consolidation, and the upper 80% of this bar is strength, and it's all-time highs. Folks, my partner Greg Capra, the most phenomenal technician in the industry, we do this every day, master trader strategies. I'm talking, I could be over the head how of some of you new to master trader and technical analysis, the way we approach and interpret objective price action on anything that moves, stocks, commodities, currencies, futures, ETFs. Everything I'm reviewing here with you applies to anything that moves. Our Master Trader Swing Strategy course will teach you the textbook through thought-building lessons to follow everything I've said here and to allow you to make your own independent objective decisions on anything that moves on any time frame. So I highly recommend you take that course, and I'll put the link here below. And we're also going to give you a coupon if you buy this course to get 50% off of Advanced Management Strategies course. That's an independent course, but anybody who learns how to trade charts and the patterns, if you don't have a solid risk management approach, you're still going to lose money and make your path to success significantly harder. So management, everything at Master Trader is compelling setup, multiple time frames, time with the market internals, relative strength, weakness to the sector, proper positioning, trade management, and that is it. Then we use bar by bar analysis, other management strategies to manage the trade to completion. Hope you enjoyed that. As always, you can email me, dan@mastertrader.com, greg@mastertrader.com. Good trading, and see you next week.